Okay, so we just finished talking about the components of income. We said we're still breaking down what's retained earnings. Quick summarization of what we're going through, right? We said that we had an accounting equation that we have to master. And our accounting equation is assets equals liabilities plus stockholders' equity. Assets equals liabilities plus stockholders' equity. And we say stockholders' equity is broken down into two parts: paid in capital and retained earnings. Paid in capital, the accounts being common stock and preferred stock. Retained earnings, one word definition, which is an account, income. Right? That's what retained earnings is. Now, we saw earlier, how do we measure income? We measure income by taking what? Revenues earned during the period minus what? Expenses incurred during the period, and that's how we get income. We saw that upon deriving income, we could decide whether or not we have a what? Net income or net loss. How do you calculate a net income? Well, you have to get a positive number when you subtract your revenues. Your revenues have to exceed your expenses. How do we get a net loss? You have to have a negative number. Basically, for the period, your expenses have to exceed your revenues, right? Okay, so back to this retained earnings being an account. One word definition is income, correct? There are certain things that affect retained earnings. Retained earnings is affected by three things. Retained earnings is affected by three things. Retained earnings is affected by net income, net loss, and dividends. Net income, net loss, and dividends. Retained earnings is affected by those things. Now, in order for something to be affected, class, it has to either affect it positively or negatively. We know that retained earnings by definition is income. So if we have income for a period, if our revenues exceed our expenses for a period, our retained earnings should do what? It should increase. Very good. If we have net losses, meaning that our expenses are higher than our revenues, our retained earnings should do what? Decrease. Very good. And last but not least, dividends. What are dividends? Dividends are distributions of income. When you take income and you give it to your shareholders, you take it out your company, give it to your shareholders. So by definitions, what is dividends? Or what are dividends? Sorry. Distribution of income. So if it's giving up income, then how should it affect retained earnings? Retained earnings should do what? Decrease. Should decrease. And so this summarizes our accounting equation. If you take a look at the entire accounting equation, you see that your assets equals your liabilities plus your stockholders' equity. Stockholders' equity is broken down in two parts. Paid in capital, retained earnings. We've already discussed all this. Paid in capital consists of two accounts: common stock, preferred stock. Retained earnings, one word definition, is income, and it's affected by net income, net loss, and dividends. Net income is actually revenues larger than expenses for a period. Net losses are actually expenses larger than revenues for a period. And dividends is an account itself. and it affects retained earnings negatively. So this summarizes our accounting equation. So back to this accounting equation. What I would like for you guys to understand is that this is an equation. So like all equations have to do what? Equal. They have to equal. Okay? And so what does all of this information mean? How does it summarize the framework for financial accounting? Very easy. Basically, we're saying that at any given time, the value of your total asset accounts must always equal the value of your liability accounts plus the value of your stockholders' equity accounts. Value of your asset accounts must always equal the value of your liabilities plus the value of your stockholders' equity accounts. That's what that means. So, if we would apply some values to these assets, let's say 5, and let's say that our liabilities values were 2. Obviously, we know that our stockholders' equity value has to be what? Doom, 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 doom. Has to be 3. Has to be 3. If our assets in another example was 10, liabilities was 6, then our stockholders' equity would have to be 4. Pretty simple, right? And so that's how we go by understanding the accounting equation. Now that you understand the accounting equation and how it's supposed to be explained, and what's the makeup of the accounting equation, we can now apply to activities and see how does activities affect these accounting equations. Remember, we talked about all accounting was recording and reporting activities or events for people to make decisions about the company. Well, now we're going to see how those activities and events affect the accounting equation. Activities and events, also known as transactions.